Patrick Grimes. Patrick specializes in commercial real estate acquisitions, private credit, energy, and litigation finance. As the CEO and founder of Passive Investing Mastery, he syndicates investments through multiple funds that provide high growth returns and passive income across a range of alternative investment strategies. With over 5,000 apartment units valued at $600 million, Patrick also has 15 years of experience in engineering and custom manufacturing. Without further ado, welcome to the show, Patrick.
Eric, glad to be back with you. You've come a long ways, I think, since we originally did this several years back.
Yeah, I would say I'm definitely a little bit more developed with my podcasting, and we've got a few more episodes since the first time. And so I'm looking forward to the interview and introducing you to a lot of my listeners that may not have been around when you first came on the show. But before we get into more details about you, if you can bring us back up to speed on who you are and how you got started in real estate, that'd be great.
Sure. Yeah. So as you mentioned before, it's Patrick Grimes, CEO, founder of Passive Investing Mastery. I got my start as a mechanical engineer. As you alluded to, I did machine design, automation, and robotics. It was custom equipment for manufacturing. Did some really cool projects with companies like Tesla, Google, Lockheed, Johnson & Johnson. Really cool stuff. It was a lot of fun. I was doing well, but as many of your listeners probably can attest, it's the work until you die. And I was looking for how to invest to accelerate that retirement. Got some advice early on by actually the founder of one of the first automation companies, design firms I worked for, who said, make your money in high tech, spend it in real estate. And his only regret was not buying more sooner in real estate. And so this was back in like 2006 and 7. And I was eager. So I went all into a pre-development, highly leveraged, certain to double, triple my money, make it big. And I lost it all during 9 and 10. So I was battered and bruised. And so that was actually my first tumble. I mean, if you want to hear more about it, I'll offer a free copy of my book here at the end to your listeners. I actually ship those out. So stay tuned for that. But still a successful engineer, made my way back into real estate and various alternative investments from there and found myself here today.
Yeah, so I'd love to unpack some of those early beginnings. It sounds like you ventured into the real estate arena, but bit off a little bit more than you could actually chew, but ended up finding success down the road. So what did that look like? How did you learn from that mistake? And also, how did you navigate those waters when you were working W-2? Exactly how were you able to accomplish so much while working at your W-2?
So moonlighting it. I write all about it in the book. It was not easy. I actually got 2 master's degrees as well. I got a master's in engineering and an MBA with a bachelor's of mechanical. So I wasn't one to just sit around. Meanwhile, I was also living in San Francisco, running a running group with some friends, runsporting.com, and traveling the world. I've done 2 different gap years and whitewater raft to the Grand Canyon, hiked base camp of Everest, been all over. And I've been very adventurous. I've always been one to be out and doing new challenging things. One of those challenges that I took on was investing. And it really was in that desire to want to build, as you mentioned, the very first words in your introduction are talk about financial security, right? And I wanted that. I didn't just want financial independence or financial freedom, because you can get that maybe from one investment that does well, but then you're on kind of a sandy foundation that can wash away from you, right out from underneath you. Even if you do everything right, wash away. And so financial security really was about allocating into various types of investments, that all of which stand on more stable ground when joined together, and what they call those like non-correlated investments. And so my journey through my career was not just to be in high tech, was also to be in real estate and to be in energy and to be in other types of investments, like we're doing litigation funding now. And not just in real estate acquisitions, but also in real estate debt, and try to find ways to allocate such that I have true financial security that can withstand the test of time. And I don't find myself having lost it all again.
Yeah, that's the name of the game. You definitely don't want to have to restart. And so many people lost a lot of real estate during that '08, '09 period of time, but there's a lot of people that learned along the way, and they are now doing very well. I mean, they've learned to go after cash flow rather than appreciation, and so it's always something to learn within those mistakes or past failures. So, if I could drag us back briefly before we move forward. So you mentioned that you were able to accomplish all the things that you accomplished through sheer hard work. You said that you actually earned a degree while you were still working at your W-2 as well. So how was you managing family and all of your other life responsibilities while you were working W-2, while you were closing transactions? What did that look like, and what was working for you? What was not working?
So, and as you talk about persistence, pivots, and game changers is the name of the book, and it kind of spells out like all of that, because when I say I was moonlighting single family, because when I came back, I started finding recession resilient markets like in Texas, and then instead of highly leveraging myself into development, I bought existing assets that I could renovate. And so I was from California while doing projects for like Tesla and Lockheed and working my ass off. And I was finding properties, underwriting them, buying them, working with local contractors to renovate them, then refining out my capital and holding them and then getting tenants. And so I had to build a team, but that moonlighting process, while it was working, I was seeing myself succeeding, and I was literally deploying every single penny of my bonus and every single extra amount of my paycheck that I could into these assets. While that was all working, I found myself really running around the clock. I was running myself ragged. I didn't like all the jobs that I was doing. I just knew that if I just kept at it, I could eventually get there. Unfortunately, I found that it really wasn't scaling. Every time I added a new property, I had to continue to churn and churn. And it did take a toll. It took a toll, and it wasn't until I met what is my now wife that I made the decision to take a break from single family rentals, so from buying, distress, renovate, and holding. And she was actually there for my very last single family closing in Chinatown in Los Angeles. And we met at Starbucks with the notary, and I said, this is it. You know, it was the refinance. I was like, I'm not gonna do any more, but let's get married, right? And that way I can spend time together. And that wasn't the proposal, but that's why I took the break. And it took 2.5 years for me to want to come back, because we got married in California and then Beijing. And I found myself now as a contractor, which freed up some of my time during the day. I made a specific change during that period so that I could allocate and juggle my time better. And I was working offsite now, not showing up 8 to 5. But that allowed me to then reset and think about alternative strategies that would scale. And that's when we founded Invest on Main Street, which is a private equity firm that then accumulated large apartment buildings. And I was able to syndicate. I was able to partner up. So I wasn't doing all the bad jobs, all the hard jobs. I was able to specialize, work with partners that are local to the buildings in the target markets. And so I didn't have to be constantly on a plane. And I found the ability for me to balance work, investing, and life, and my wife, right? And went very well for us. And here we are. We ended up moving to Hawaii in the process. So I think things have gone pretty well.
Yeah, I would definitely say so. You guys are doing really great. You've got 5,000 units under management. You're involved in diversification in all type of different funds. One last question pertaining to your beginnings when you had that W-2. Was there a certain dollar amount that you were aiming for before you exited that W-2, or what was the goal? What was the plan as far as when it was time to actually leave and get away from the corporate world?
Interesting you say that. So when I switched from being a W-2 to a contractor, that was a risk, right? Set up shop as an S Corp, which is more tax efficient, and also being off-site was a bit of a risk because you have a little less visibility about what's going on. And so I made that step though, which obviously gives me a little more control to be able to work more professionally in both my in my investing career as well as my automation career, right? And so that was the first step. And I think it's tough. Not everybody can do that, but it was necessary because when you start taking your investing career more seriously, you need to be able to have a little more freedom when other people that investing is their day job are working. That's not during the nights and weekends that you have available after your W-2. It's periodically throughout the day when they want to work, when brokers want to talk to you, right? All the supporting industries, supporting vendors, all those people want to be on the phone. So that was an important step. The next step actually happened, and it wasn't as for this. I'm traditionally was very personal, and throughout the whole single family journey, where I was in the development, lost it, and then I did a whole bunch of single family homes, which actually I'm just finally starting to sell those off. They're doing amazing, but I'm trading them up to different alternatives now. They've done incredible. And then through the growth of Invest on Main Street, it was a very personal journey for me. I tended to be the engineer that would kind of sit in the back room, and I would analyze and underwrite and fly around and figure things out, but I wasn't out there. I wasn't on podcasts. In fact, I was a partner in over 1,000, I think almost 2,000 units before I ever did a podcast. And then it was when I finally told my story, I was told by someone, hey, you got to get your story out there. People will resonate with it, which was challenging to finally tell. It was when I finally got out there and started telling my story that people in my automation career began to learn about, and my friends and some of my family members actually all began to learn about my investing journey as well, which is kind of scary for me. I don't know why. I was a typical engineer, I guess, kind of reserved. And it was through that period where even people in my automation career was like, why are you doing automation still? It's like, well, I love it. It's a lot of fun. And plus it creates a ton of income that I can repurpose. And so it became, over the course of a couple years, record years through COVID, when we kind of converted to doing automated assembly cells for COVID test kits. It was literally record years for us in automation, for me personally, year after year. And then post that, things slowed down, and it made sense to make the jump.
Nice. Yeah. I mean, that's really good that you set a time period. You knew exactly when it was time to leave or exit, and you made it out of there. And so you achieved that financial security. Things went well. And so that's great for you and great investing. So if we can turn the page, let's bring things up to speed as to exactly what it is that you do today. And so you are involved in multiple different alternative investments. So oil and gas, energy, real estate. Shine a light on exactly what it is that you guys are doing today and how you're providing your passive investors with great investment opportunities.
Well, so our company, Passive Investing Mastery, really has the mission of providing education for our investors to achieve mastery in the art of alternative investing. These are the types of investments that the people that I worked with, that I contracted with at Google and Lockheed and Facebook and Raytheon and some of the biggest, SpaceX, the smartest people in the world, Apple, none of those people had any idea any of these alternatives existed. They were in their company's stock. They were in their 401k IRA. Maybe they were buying a flip, but they had no idea that the instability, and I had firsthand, that portfolio on the cyclic swing of the stock market, on the cyclic swing of real estate, the instability of what they were working towards. And I found a way out myself, and so I like to share and educate. So we have every 2 weeks we do a mastery series on alternative investing strategies. We bring in different sponsors, different strategists, tax, asset protection. We've had every kind of alternative investing on there, from gold to gold mining to crypto to parking lots to laundromats to we bring in all kinds of different alternative investment sponsors and strategies, and we talk through them every 2 weeks. And so kind of blue ocean approach helps to accelerate that knowledge, that intake, that awareness of how you can allocate. And then we educate people on balanced allocation, on how then do the wealthy. And if you look at any of our slide decks, we leave it that they don't allocate 100% into real estate. It's like 26% into real estate, right? But where else are you? There's another 25% in alts. So what are the alts? What does that even mean? What does alternatives even mean? And how do you select those? And then we train people up on what is it to mean to be truly financially secure. It means you're in allocations that don't ride the same waves. We call that correlated, non-correlated to each other.
Yeah, that's really interesting to hear that you guys are investing in attorneys and litigation funds. What comes to mind with me is, are you guys like taking a look at attorneys' track records, how credible they are, how many wins they have? How are you guys going after that? And do you actually have to be like a legal professional to invest in a certain deal?
It's a good question. So what's interesting about attorneys is that it's a very simple industry. They run on basically hourly rates, right? And legal fees and filing fees. So it's not very complex. It's about the same. Legal service is about the same size as the global airline industry. But keep in mind, the global airline industry is immensely complex. And so there's a huge supply chain there. In order to invest into something like the legal services, where if you've identified, hey, this is a great place to invest because of the stability over the decades, you've got to figure out how to solve a need. And so just like in real estate, how we're providing housing for tenants, and legal services, we can provide access to justice for the harmed. And we can do that by similar processes that we engage in real estate. We'll look at operators in the legal industry, like we'll look at operators in real estate. We'll look at the projects that these legal industry attorneys are working on. They're working on cases, right? Look at their track record, as you said. In the past, we'll see how much skin in the game, how much time and resources and finances have they invested into this. Just like we do in real estate, we want to see how long that they've been working, we want to see how viable this project is and how much they have invested into it.
Yeah, that's really good details and a great explanation on that. You're diversifying, as you've been saying all throughout this episode. You've got several cases going on all at the same time, and they've got exits or ending dates that's going to end at several different periods. And so your load is carried through several different litigation cases. So I'm just curious as well, is there any cash flow in between? You may have already shared that, but what kind of cash flow or cash on cash returns are these litigation funds throwing off?
There are very few litigation funds, if any, that are structured like ours, where, in fact, we're the only one we know that is, my partner's been doing this for 15 years, and he's allocated, he's been responsible for initiating about $750,000 and recovering billions of dollars through litigation funding efforts. And he's worked for private institutions, hedge funds, sovereign funds, usually $500, $100 million, managing litigation funding and other asset-backed credit-related lending investments. And so he comes from a really big background. We've specifically selected this structure because we believe this to be the best kind of late-staged scenario in which you get strong returns with a limited risk. But our specific structure does not, quote-unquote, cash flow, because the asset and the structure of our agreements inherently doesn't produce cash flow. So the attorneys that are coming to us asking for funding, they're not providing housing for tenants that'll pay them rents, right? They are providing access to justice for those who can't afford it. So there's no cash flow coming back to them to then pay us between now and settlement.
Okay. Yeah. So that actually makes a lot more sense to be able to provide distribution. So it's going to be similar to receiving cash flows, so to speak. On the passive side, you'll be getting paid out, etc. So, hey, great explanation on that. It sounds like you guys have a really good opportunity going there. We're going to turn the page and start wrapping things up. But before we do, we've got a portion of the show that we like to call our Moonlight Coaching Round. And typically what we do is ask our guests a few questions. If you could hold your response between 1 to 2 minutes per question, that'd be great.
Fire away.
First question I have for you is, what do you think every new real estate investor or individuals that's looking to invest in syndications should know before investing in syndications?
That's a good one. It took me a long time to learn to partner, and I think that was the key. It almost, when I went from doing things all on my own to doing things with others, it took about 2.5 years to warm up. And so I had to dig deep into the industry. I actually attended some events. I went through coaching programs. I read a bunch of books to try and understand what was the goals and the mindset. And so I think that it's very important for them to really get to know their sponsor, to really study their background, understand their timeline for payouts, their timelines for exits, how financially strong they are. And do those all align with you?
Okay, great answer. The next question I have for you is, if a person had minimal amounts of time, minimal money or experience, but they wanted to start an investment business like yours, what steps would you recommend for them to take to start and scale a business like yours?
Well, so the process that I did, it was, single family, was to kind of lose myself and all that. And I felt like, larger investments were too hard. The way that I did it kind of the third time, which was when we set up Invest on Main Street, and I knew that I didn't just want to passively invest. I wanted to be active. I was one of those guys that I was committed to eventually being a full-time investor, and I got there, right? I did that by partnering up. And one of the reasons why it took me so long to actually get into my first deal is because I sought after people who didn't need my help. People that were doing really, really well. People that had operators that had great assets, a great following. And I wanted to find people that were really winning and how I can, and then work with them. And so I actually worked for free, as you could probably say, for years, traveling around, doing due diligence walks, underwriting deals. I joined communities, and I learned how to contribute to these investments. And I kept offering my help. I think those are probably the tips I would give individuals is learn how you can add value and give to the right people, and it'll accelerate your journey much faster than if you do it in reverse.
Yeah, I hear that quite a bit. Work for free and just get connected with individuals that know exactly what it is that they're doing and learn from them. And so there's a lot of people, there's too short-sighted that they can't see the long-term ramifications or benefits that could come from working for free with an individual that is very seasoned. So great advice. We're going to turn the page and we're coming to the close. But before we do, we always like to have our guests share a great personal development book or either a great business book.
My most recent, let's see, what is potentially, probably EOS has been the one that's been the coolest for us recently. I'm kind of debating because Miracle Morning, to me, by Hal Elrod, was just a credible one. I actually grew up in the same town. We used to trespass on his property when I was a kid, use his rope swing growing up. But yeah, that Miracle Morning was just an incredible book for me because I run in every morning, and being able to structure that time to myself in a more organized way was just incredible. The EOS just totally transformed and built our organization and got buy-in from a lot more individuals and really focused us on our goals and our rocks. And so I think that's also a really great book.
Okay, that's good to hear that you guys use EOS as well. And EOS, it provides value to larger outfits such as you guys, all the way down to individuals like myself with just one person and using some VAs. So, but it is absolutely game changing. Hey, Patrick, thanks for coming on to the show. You provided a lot of value, showing us exactly where you came from, how you got your start, and then how you began to get traction, and all the way up to where you are currently with investing in litigation funds. If someone wanted to reach out and connect, is there a preferred method?
Yeah, so passiveinvestingmastery.com. Passiveinvestingandmastery.com is our website. We have our 3 open investments there on the top of the page. If you go to passiveinvestingmastery.com/book, I will, and if you're interested, we ship a signed hard copy of this out, and it's my way of giving back. It's persistence, pivots, and game changers, turning challenges and opportunities. I did a chapter in here. This was an Amazon bestseller. Phil Collins, League of Tarth, Adept Lefford, real estate, entrepreneurs, NFL, NBA coaches. It's just really amazing book with some incredible people. I had such a good time. I tell my whole story, ebbs and flows, the in and outs, losing it all, the successes, my failures. So happy to ship this out to you. If anybody wants to chat, or make sure you go to passiveinvestingmastery.com/book, but you need to put Moonlight Equities in the promo code. If a bunch of random people fill it out and they don't put some way to know where you came from, we may not ship the book to you. So Moonlight Equities in the promo code. And if you want to give me an email, it's patrick@passiveinvestingmastery.com. We have a calendar link on my website. And one of the things that I love to do is meet with people. I like to talk about their goals, understand where they're at, and get them pointed in the right direction. And so I'm more than willing and happy to talk to anybody, regardless of wherever you're at in your journey. Happy to chat and get you pointed in the right direction.
Well, Patrick, once again, thanks for coming on to the show. We'd love to have you back.
Appreciate your time, Eric. Glad to be back again.